Hi, this is Alicia, and I will be doing this project on the Federal Reserve. What is the Federal Reserve? It was established in 1913 by Congress and enacted into law by the President Woodrow Wilson. There are 7 board members that serve 14-year terms. The Federal Reserve System is made up. All 7 board members are appointed by the President and must be approved by the Senate. The Federal Reserve Board members serve only 14-year terms. Only are able to serve 1 term. However, if a board member is appointed to serve an unexpired term, they can be reappointed for another full term. The board's chairman and vice chairman are elected by the President and the Senate. The chairman and vice chairman are elected for 4-year terms. Only 1 member can be selected from the 12 Federal Reserve districts. Who are the members of the Federal Reserve? Currently, there are only 5 members. Janet L. Yellen is the chair. The vice chair is Stanley Fisher. There's also Daniel K. Tarullo, Jerome H. Powell, and Lael Bernard. What are the responsibilities of the Federal Reserve Board members? Their primary responsibility is monetary policy. The Federal Reserve Board has regulatory and supervisory responsibilities, margin requirements, and smooth functioning and continued development of the nation's vast payment system. The Federal Open Market Committee, or the FOMC, can affect monetary policy by buying and selling U.S. government securities, altering reserve requirements such as the amount of money banks must hold in reserve against deposits, and adjust the interest rate it charges to commercial banks. The Fed's regulatory and supervisory responsibilities include advising banks, regulating, and monitoring financial activities of bank holding companies that are members of the Federal Reserve System. The Fed's margin requirements. The Federal Reserve limits the use of credit for purchasing or carrying securities. They also make sure that everything is functioning smoothly and developing in our nation. Within the Fed, there are 12 Federal Reserve banks. They broadly watch over the other member banks. All national banks and some state banks are part of the Fed. They are called member banks. Federal Reserve meetings. Most are public and happen several times a week. The Federal Advisory Council is composed of 12 representatives of the banking industry. They meet 4 times a year: first Friday of February, May, September, and December. Meetings are always held in Washington, D.C. Reserve banks will choose 1 person to represent their district on the Federal Advisory Council. The Federal Advisory Council members are listed below. The Federal Reserve Districts. The Federal Reserve Bank Organization Committee includes Secretary of the Treasury, Secretary of Agriculture, Comptroller of the Currency. There are to be no less than 8, but no more than 12 cities are to be part of the Federal Reserve cities. Branch offices may permit or require any Federal Reserve Bank to establish branch banks within Federal Reserve districts. Branches must follow rules and regulations as the Board of Governors of the Federal Reserve System. Why is the Fed important? The Fed is very important because it keeps tabs on all the banking industry and the open markets, advises the commercial banks of potentially sound investments. Websites and resources.